EMJ Capital President and founder Eric Jackson joins us now. It's good to see you as always. I mean, I don't know if you heard the interview I just did with Brian Belsky, but he says these are the exact stocks you don't want to buy right now. Why is he wrong?
Well, I think Brian's pretty optimistic, and so in general, I agree with his take on where we go from here in the second half of the year. I would just say that basically, if you look back, something like KWeb bottomed on March 15th, so that's the Chinese internet stocks. ARC bottomed on May the 12th, so growth tech. XBI, biotech, also bottomed on May the 12th. Some other growth stocks bottomed in June 16th, Scott. So Bitcoin and all the other crypto assets bottomed on June 18th up till now. I think the bottom is in for a lot of these growth stocks. A lot of these growth stocks in these sectors were the first into this downturn in the stock market 18 months ago. And I believe they're going to be the first ones out.
Right? They were deservedly so the first ones in.
They're the most sensitive to rates, right? They're the most sensitive to the risks of a recession. So yes, deservedly so, they went down. They went up the most, and they go down the most. Volatility is the name of the game with these. But are people going to come back to these stocks? Yes, because they have the growth rates ultimately. In a period of recession, in a period of inflation, people always want growth. And so I think this sector is going to rise again.
It's what they don't have that's the issue, and that's profits. In this kind of market, well, why would all of a sudden unprofitable growth stocks, which got way overvalued before, suddenly become back in favor if only the valuation has come down but the profitability hasn't gone up?
Well, I think you got to sift through these names, and there's the best performing tech stocks of all time. You know, take your pick: Google, Amazon, all the FANG names, Scott. They've always been huge cash flow producers. So you got to get to cash flow positivity eventually. But Amazon didn't get to cash flow positive from 1996 until 2002. If ARC had been around in the dot-com era, everyone would say, oh my God, Amazon, it's one of these profitless tech companies. What was Kathy smoking getting into this name? So you really have to think a couple of years ahead and determine which of these stocks that might be cash flow negative at the moment or have lost money recently are actually about to turn the corner. And those are usually the ones with the best re-rating opportunities and obviously the best upsides with that.
But it's funny to me. I keep hearing this. It's Amazon was this, Amazon was that. It's like Amazon has become the proxy for every single frothy part of the market that's been deflated. Anthony Scaramucci sat to my left, was it yesterday, and suggested that Bitcoin was like Amazon back in the day. A lot of non-believers, Jeff Bezos on the cover of magazines, saying Amazon.bomb. Now we're talking about it again today. Not everything's the next Amazon, Eric.
Yeah, no, you can't cherry pick. You're right. And I would say there's a big difference between a real business producing real cash flows and some cryptocurrency that we don't know how to peg the valuation of it. So that's a fair point. But I would say that, pre-dot-com, pre-20 years ago, there were other periods of recession. So Belsky in the last segment, he mentioned 1990. 1990, I think, is the right comparison to what we're going through now. Now, back then, there weren't many growth tech stocks. I mean, there was IBM, but there weren't a lot of others out there. And I don't even know if you'd call IBM a growth tech back in 1990. But Oracle existed. It dropped 80% in 7 months from March to October 1990 in the lead up to the big recession fears back then. Similar to a lot of the profitless tech stocks today. Adobe back then dropped 65% leading up to that. What's interesting is the entire market bottomed in October of 1990, 3 months ahead of when the Fed finally relented and started easing. Could we see 3 months from now, we're going to be in October. Is that the time when we start to get signals from the Fed that they're actually pulling back and easing and actually thinking about rate cuts in response to what might be going on in the real economy then? I think so. And then Adobe shot back up, regained all of its 65% losses over the next 6 months. So got back to its all-time highs at the time. Oracle 10x'd over the next 3 years from its bottom in October 1990. So yes, you got to find real businesses. You've got to find ones that really can turn the corner. But the opportunities are going to be there, and they're going to come from the growth tech sector. It's not going to, you're not going to get mega returns from, consumer discretionary healthcare, et cetera.